What's going on, YouTube Nation? This is Darth Dividend. I would like to discuss stock that I bought today. It's my day off, working as a nurse, and kind of feel really excited for this stock. I had this stock in my M1 Finance portfolio in some of my previous videos, and I actually did a review on this stock recently, and I'm really excited for this stock. It has beaten the S&P. It has raised its dividend. It's taking a big hit today because of trade wars and potentially the corona virus that's going on internationally. And I feel very confident in this stock, and I went in for the kill. It's low now. And again, I'm saying this, it has killed the S&P recently, but it looks like just reading some articles and just jumping to a conclusion that this is a really hot stock right now, and you should consider this in your dividend portfolio. Has very good exchange traded funds within it, and that is Invesco. So I just bought 18 shares today on my E-Trade account. As you can tell, my Wendy's account is right below there too. I have 35 shares. I know a lot of people want me to discuss and see how my stocks are doing and how many stocks I own. Well, I just bought 18 shares today in Invesco. It's a little bit down. I wish I would have got it a little bit earlier, but 2.59% being down, and you see the reds. But I'm going to be patient with this company. I feel very confident. I was involved with their sphd and some of their stocks. I'm pretty sure with the company, the hospital I work for, there's a lot of Invesco companies, Invesco ETFs and mutual funds that we can invest in, but I found a better one. But I really like, for a lot of these people that are a little bit older, and some of you guys that watch my videos that might be a little bit older and in exchange traded funds, they are the notorious for the stock symbol QQQ. That is Invesco's like mothership. That is like the stock that everybody discusses on the market, how to compare against the S&P and the Dow and everything. So everybody compares that symbol QQQ to some of the big guys out there and the big guns. So this is what I like about Invesco. Today, Zacks.com just gave a review and said that they should be a buy right now. This is at 1:15 p.m. Eastern time. They rated them as a buy. I usually look at multiple sites before I make a decision and look at their analytics, and I always study graphs as well. So they rank them in the top 7%, the industry rank in financial and investment management, which is very good. And for $17.76, that's pretty hot right now. So it was up to 40, as I'll show you a graph in a few minutes later. This is really a good stock right now to look into, to put in your dividend portfolio. I know it's 6.82%. If you look at, it says dividend right here, and it gives off $1.24. But honestly, they're down right now. I mean, if you look at the really good investment companies like BlackRock, T. Rowe, I know that Vanguard is a private, and I know that they're not public, but these guys are with the big guns. They just took a big hit, and there's no way that they're going to stay at $17.76. I mean, I'll show you their history against the S&P and how they beat them. It's just that with market issues and the media, I see as being an issue why they're kind of stuck. So here's their their earnings. Here is the beta. Here is the market cap, 8.25 billion. That's pretty attractive. There's their 52-week high and 52-week low. I wish I would have got it at $15.15. That would have been amazing. But eventually, I see them going up. And Zacks, a lot of people look at Zacks as a site to look at. It's kind of like a go-to site before they make a call. They have some very good articles on stocks and why you should buy them or get rid of them. And they have very honest people on their website. So I really follow those guys too. I looked at Yahoo Finance, as you can see in the corner. I look at numerous sites before I jump to a conclusion. I don't like this, when people say, I got a feeling that this is going to be good. No, I'm looking at the trends. I study the data. I look at how much the market cap is. I look at how much revenue they are. I look at how they make an impact on people's lives. Like an example, if you see that stock that I had previously right below Invesco, it's Wendy's. Well, people are in a hurry to get food. So, they have beaten the S&P, and I'm pretty sure they've continued to beat the S&P. So that's why I have them in my dividend portfolio. So this company eventually will grow. Again, I'm not a financial advisor, but they're not going to stay at $17.76 a share. They do a fantastic job as a company. A lot of people invest in their mutual funds. A lot of people love their exchange traded funds that they have, and they're just a very successful company. So I see these guys growing. I was really excited to put some money in. I used just some logic, and I will show you their dividends and how they're going with the next slide. But right now, here's Invesco. To the max, it shows that they're 189.33% up compared to when they started. But if you look at how they did against the S&P all those years, usually they end up beating the S&P. So just because they took a big hit right now does not mean that they're going to stay like that against the S&P, because they eventually will get back up to here. I feel very confident that they will be back up to here and just keep on growing exponentially because they're such a great company. They raised their dividends. I know that they're at 6%, and people are like, whoa, that's a little high. Are they desperate or something? Try to keep on and hold on to investors. But I just, if it was low the whole time, I wouldn't put any money in it. And it just took a big hit, or it's never beaten the S&P. I wouldn't even waste my time with it. But this is, this has to do, I'm not trying to get political, but it could be due to some political reasons, as well as some people getting sick. But look at this jump all of a sudden. It's going to make a comeback eventually. So I feel very confident in investing in these guys. They give off a dividend, which is nice for investing in their company. And I just see in the future that these guys are going to rebound. Just by looking at their trends and their history, with people investing in these guys, if it wasn't for that hit, they would be right over there. And this, you can tell this is probably the recession right here, dropping. But they're just good. They're just, how can you say no to QQQ? These guys do a really good job as a company. And, they may take a hit now. They're going through some hard times, but I just really see them rebounding. Very successful companies, when they get hit hard with stuff, they adapt to the situation, and these guys are adapting very well. People are starting to make more articles about them and do reviews that they're on the rebound, and that this is one of the hottest stocks that you can put some money in. So, don't be afraid to put, some money in right now. 10 shares, maybe 20. It's not a big deal because it's so down right now. Now, if this would suck, obviously, if I was right here and it just dropped, I wouldn't panic, so I'd just hold on to it. But now's the time where you just strike and just put your money in Invesco. And again, I'll say this for probably the 5th or 6th time. A lot of my videos, I'm not a financial advisor, and my disclaimer kind of explains things, but this is for entertainment purposes. And I just really like the way that their dividends are going up, and the way that they're fighting to get back there and beat the S&P. They are, they're doing just They're doing a fantastic job, and this is not bother. I can tell you, I can almost guarantee this is not bothering Invesco right now, that they're not beating the S&P and that they're below the S&P. They will be back, and they will be kicking people's asses in the stock market. So I'm very excited for them. So here's their dividend history. Here's February 2019. It's 30 cents a share. It's going up. If you can look at the dividend history and the annual dividend, it has increased. So this is why this is a good stock to look into while it took a big hit. Usually I don't put payments in stocks if they take a big hit, but this is such a successful company, and they've been there, done that as a company. Why would you not invest in a company like Invesco? I mean, they have a very good reputation. Their ETFs are kicking people's asses. It's just, this is the time to strike. And I always discuss times when you have to be patient and throw your money in. And this is one that, again, there's a risk for anything, but this just looks like this is something that I feel confident in, and I'm putting money in as of right now. I mean, geez, $180, $200, what's the big deal if I'm just being smart with my money? Because obviously I'm going back to graduate school, and I might just have to put in $100 a month into my M1 finance account and stuff. So I want to get this E-Trade account established before I go to graduate school and reinvest the dividends and start racking up the cash. So this is my strategy right now with Invesco. So it gives off some, February, and February it's going up. Hopefully it'll go up. We'll see. There's no guarantees anytime when you invest in the stock market. So thank you for watching my video. Make sure you subscribe to my channel and hit the bell. Again, I make these videos for you guys. I love to discuss stocks. I love to see how you guys are doing. A lot of you guys that have YouTube channels, you guys have been very good influence on me, and I like discussing videos with all you guys out there. So, this is something pretty cool. So hey, give me a few likes. Let me know what you think. What do you think about Invesco as a company? What do you think about them as a stock and as a, how would I say this? As a dividend stock, and would you put them in your dividend stock portfolio? Do you think it's too risky? Do you think it's worth it? Let me know what you think of my video. Thank you.